May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar index. The US dollar index. Let's take a look at the economic calendar for the week ahead. Monday, we got a little bank holiday for the GPY. Listen, all this week, nothing really major. All right, nothing major. Just some red folders that will inject some good liquidity, some good movement in the markets, and I think we should have a pretty good, uh, field of opportunities. All right, coming this week, we have no red folders on Wednesday, but we got GDP coming for the CAD. We got core PCE coming for the US on Friday. That's the one I'll be definitely looking at. And there is a policy rate decision, a monetary rate policy for the Swiss franc. Okay, so yeah, it's a good week coming. Good week. Nothing, that'll potentially reverse markets, but some good liquidity going in. All right, now we're looking at the monthly time frame up here, and you can see I've been highlighting this for a couple of months actually. We make these lows, we make the contact on this support line, which the market seems to be holding to pretty well. And you'll remember that I highlighted this low last week, the end of week prior, and we did take that low this past week, but, and that's a big but, I must say. Let's highlight this. We took this important low, the low that came in contact with the support line of this trend line, right? Again, I'm not a trend line trader. I just mark trend lines to show where the market is structurally. Okay, so we take this low. We take this. The market took this low last week and pulled all the way back up into the consolidation. That's key. I need you to just make a good note of this, because even though it swept past the low of the previous month, all right, which was August, which was August, and we took that low, all right, and and this whole candle, oh man, this whole candle was a big bearish blue candle before it started to turn over. Look how it is ending, as the market is as this candle is going to close in approximately 9 days, 6 hours. All right, as this candle is closed, if it closes within the high of the previous monthly candle, it would indicate that we'll probably be trading towards this high on the next candle. All right, for the month of October. So what does that indicate? That we're going to probably continue heading up. All right, but right now we're on that path, but this candle has not closed yet, and there's plenty of time for it to do so. If it closes where it flips back to a white candle, a bullish candle, then we're going to be trading back towards that high, and our sights will be set for the high of this candle here. A lot of ways this thing could play out, but the key to see here is that we did sweep this low, but we did not close below that low. Closing below that low would indicate that there's probably some more bearishness to come. All right, it would indicate the intent of the market to go lower. But being that it was just a sweep, that means all it did was take the sell side liquidity from that low. People who had stop losses down here and who went long, the market took them out of their trades and now want to go higher. So I am cautiously bullish. Yes, the market's still very bearish. All right, we've been bearish since January. All right, we only had one bullish month, which was July, and we've been bearish since. But in light of the Fed cut and all, even though that brought prices down to sweep that low, it seemed like that this was a manipulation of the low of July, and I think we're going to head up higher. Let me go further with that. All right, because you got to remember this. Something you got to keep in mind. This shows the higher time frame, the bigger picture is from this low. We've been bullish, higher highs and higher lows, and we are in the midst of making what could be the next higher low for the next higher high. You know, I'm not saying we're going all the way up here. That's not what I'm saying. I'm saying that we are overall higher time frame. We're still bullish, and we have not proven that this as a pullback. Let me clear. Let me make sure you're clear on this. If this is the last bearish leg, and it is, all right, and we've started to pull up and we correct that move, this has not shown that we haven't shown that this pullback is over. This retracement is over. We'll know that retracement is over when it breaks that low. You understand? I hope we're clear on that. It has to break that low. Why? Because this is the last strong low that created this last swing high. So we're still in the middle of this trading range here. Well, actually, we're not at the middle. We're at the point where price could find support for higher prices, and I've been saying that for the last month and a half, 2 months. That this diagonal trend line of support may show that the market is ready to go higher from here, especially after that last sweep of that low, that liquidity low we just, the swing low that we just swept. Okay, now let's go to the weekly, and you can see, oh, something I want you to see. You see how many weeks we were at these touches? I'm going to show you. Look, from the touchdown to where we start going up, we were down here 15 bars. That's each week is each candle is a week, right? 15 bars, 15, 16 bars, that's 4 months. Got it? If we come over here, this is the last low, all right? Until we started going high, that's 22 bars. All right, another 4 or 5 months. That's 5 months there. All right, we've only been down here half that time. We've only been down here half that time. Look, oh, this is the new low. It made a new low technically, yes. But we've been down here 11 bars. We still got like another 10 bars to go before if we let the other touches tell us anything. We could be down here for about the same amount of time, 4 or 5 months. All right, and we've only been down here just 2 months. So and I want you to see how the nature of this the way the market came down here and then made a quick turnaround. All it did was sweep this low. That's the only thing it came down here and accomplished. Again, if it had closed below that low, then I would be thinking price is probably going to end up going down. We'll see a pullback to the support line, and then we'll see prices move down from there. That's not what happened. Came down here, swept that line. All right, swept the line, came back into the consolidation. Now, and we can see on a weekly basis, it actually turned that candle more bullish than bearish. But we're not going to harp on that. What we want to harp on is that it closed above the above the low of the previous week. It came down and came back within the range of this candle, the high and the low. All right, that means we're going to trade towards this high with the new weekly candle and possibly towards that high. Right. This is a quick turn, and there's a lot of it may be a V-shape recovery on the lower time frame, but this has lots of bullish momentum, especially if we're coming back into the consolidation. Some people would say this is a fake out of this consolidation here, a fake out. And when prices return back into a consolidation after it looks like it's breaking out, usually it's going to go the opposite way. All right, so usually, frequently, 6, 7 times out of 10, you're going to see it continue to the high of that consolidation. All right, if we go to the daily, come on, I don't know why it's taking that long. I'm sorry. All right, we can see how the market came down and created that bearish fair value gap right there, right? Created a bearish fair value gap, and price expanded down towards the support line of the trend line, right? Boom. And then we had this quick turnaround. Boom. All the way up. And what did we do? Not only did we take out this bearish fair value gap here, all right? We recognized it, respected it, and then closed past it, all right, on Friday. Closed past it, just totally disrespected that bearish fair value gap, but we also created a bullish fair value gap along the way. Fair value gaps tell you what the order flow is. And when you have candles expanding and creating fair value gaps, price comes back, can come back and tap that and find support in order to go higher. Okay, and that's what I'm looking for. We got another candle here. This one closed past the high of the previous candle. All right, I would be looking for price to trade towards that high. Sorry, what is that? I don't know. I'm going to get rid of it. Let me see if I can. There you go. All right, I want price on the next candle that opens to trade towards that high. That's what I want to see because it closed past the high of that previous candle, just like this one closed past the high of this candle. It just indicates bullishness, all right? Especially the fact that we closed through a bearish fair value gap. Now, about that one, I want to see this thing invert, and become an inverted fair value gap where price trades. This squiggliness is driving me nuts. All right, where I want to see price push up, pull back, push higher, and then pull back and find support on this side of this this bearish fair value gap, which would have inverted. I want to see price follow through, pull back down, and find support on this inverted fair value gap. If it doesn't, that's fine because there's a bullish fair value gap below it. But this would indicate what I want to see is the market open up like so with a candle, come down and give a wick right to here, and then close higher on Monday and Tuesday and continue up higher. That's what I want to see. And that's what I want to see. I think that makes sense. I think that's reasonable. And what would mean this becomes our draw on liquidity again for Monday and Tuesday. And we'll be trading towards this high as a draw on liquidity for the week. Okay. Now, there is a bearish fair value gap over here. Boom. That was already used, so it's a non-factor to me. That's why I'm looking at, price has already tapped it and shown respect to it. I would like to see price run through this area and tap that high. that makes sense to me. Okay, so yeah, I'm cautiously bullish. All right. For those that are looking for to short the U.S. dollar, hey man, don't be too quick. Don't be too quick with that. All right, let the market show you something. But if I see this inversion fail, then I'll be looking for the inverted bearish fair value gap. I'm going to be looking for price to hit this bullish fair value gap to see higher prices. That's what I'm going to be looking for. I hope you enjoyed this video. I hope you enjoyed the breakdown. And if you did, hit the like button, hit the boost button. All right. You've already seen that I put out 2 videos today. That would be the hello, where am I? All right, yeah, you'll see one for silver and one for gold. All right, that I put out earlier today. Go check those out. I'll see you in the next video. Thank you for watching, and may profits be upon you.